CNBC has learned the Trump administration currently considering now 11 individuals to replace Fed Chair Jay Powell when his term expires in May.
I think we're in a good spot right now for talking about bringing the rate down. In my view, if you're starting to worry about the downside risk of the labor market, move now. Don't wait. People love to talk about long and variable lags. Why do we want to wait until we actually see it crash before we start cutting rates? So I'm all in favor of saying maybe we should start thinking about cutting the policy rate at the next meeting, because we don't want to wait till the job market tanks before we start cutting the policy rate.
The frustration that the president has is that he believes that other countries have cut rates and the U.S. hasn't, and he worries, just as with the BLS, he worries that maybe there's some partisan calculus going on here. And if you look at the Fed votes, it's very disappointing, I think, as a person who's long believed in the independence of the Fed, that we would have Fed votes that were separated along party lines. It's very disappointing to me that the Fed would be putting an explanation out there for these unusually high rates, that there's this massive uncertainty and massive inflation coming from tariffs, without actually showing us their work.
The broad conduct of monetary policy has been broken for quite a long time. The central bank that sits there today is radically different than the central bank I joined in 2006. We need regime change at the Fed. It's not just about a person, it's about an approach to economics, it's about approach to what they're doing. And I'm troubled when I see them moving the goalposts. And I know it's very common now to say the problem is the president's being so mean to these guys. Most of these Fed's problems are because of Fed mistakes. The credibility deficit lies with the incumbents that are at the Fed, in my view.
It would be an incredible day to have more market savvy, more market competent people involved in the monetary policy decisions. I do see the power in the Fed. I understand it and have been a believer in that backstopping structure. And I would bring that to the table for sure.
I'll accept the job if we set it up for success. If we can protect the value of the dollar, be the reserve currency, that'll give us lower interest rates over time. If we aim for low and stable inflation, and if we can respect the independence of the institution under the Federal Reserve Act.
Well, it's very important, and I've said this a number of times in the past, that we maintain our independence with respect to monetary policy. I think that's very clear. But we also, as a part of that independence, have an obligation for transparency and accountability as well. But we also have an obligation, in my view, as we have throughout the time that I've been here on the board since 2018, to listen to a broad range of voices and to understand how others are viewing the economy and how that should influence our decisions in monetary policy making.
I still think the funds rate, you can get it down faster and more aggressively than where they are today. You're talking about, the inflation report today. You're still talking about there's a little bit of elevation from tariffs, which I think you have to be respectful of, and I think the Fed's been respectful of that. But you're still running under 3% core CPI, and things like shelter, you're starting to see some improvement in. I think they've got room. You talk about 5-year inflation break-evens at 2.5%. I think you got room to get that funds rate down 100 basis points.
A 4.33 Fed funds rate is just too high. And the market will always tell you what you should be doing. And we see the inversion at the front end of the curve, which is over 50 basis points, tells us that we could easily do a 50 basis point makeup cut because the data had been wrong in the past without disrupting anything at all. So it seems like pretty much a no-brainer to me.
I disagree with those who say that, they're doing fine. It's a tough job. There's no question about it. No one expects perfection. But this is, again, the productivity of all of their contributions has been negative. There really isn't any intellectual diversity, any basis for debate at the Fed. And so they're consistently wrong.